Hey everyone, it's Money Journey. Another week, another earnings report to break down. This time, we are diving deep into Alibaba. That's right, the Chinese e-commerce giant is set to release its next quarterly earnings report next Thursday, August 15th. In this video, we'll cut through the noise and give you a comprehensive preview. We'll look at Alibaba's recent performance, dissect analyst expectations, and apply both technical and fundamental analysis. Plus, we'll weigh the potential risk and reward. So, if you are an investor or just curious about one of the world's biggest tech companies, stick around. Let's get started. Alibaba stock is down 1% today, but in the last few months, recent performance has not been bad actually. Year to date, the stock is up 6%. Is losing to the S&P 500, but in the last few months they have been recovering some ground. When you look at the 5-year performance, that's when it gets really painful. Basically, since the top in the end of 2020, the stock is down 75%, but in the last few 1-2 years, the stock has been going around $70, $80, $90. They have been having some resistance around that levels, but right now Alibaba just announced in the beginning of this month that they will report earnings. It will change anything, we don't know, but there are a lot to recover. They are in a turnaround story. Sentiment are maybe at a turning point. Investors might be getting more bullish on China, but still China is China. It's always a difficult market. You have to be a really believer in the Chinese economy. But what is the situation for the next Thursday earnings report? Expectations as usual are really low for Alibaba, so it's gonna be difficult to be disappointing with this earnings report, in my opinion. Investors, analysts are not expecting much. So what will happen? Looking at the technical situation right now, the stock is above the 200-day moving average, around the support or resistance of $78. It will be good to end this week above the $78, $80. It's a really good mark as well. If Alibaba can sustain this mark until the earnings report, that might be some resistance, but in some case expectations are low. If you go into the next report and the earnings report is worse than what you were expected, we might be down 5, 10%, 15%. There are always that risk, but I do believe it's not the most probable scenario. Then you can be reasonably in line with expectation, might a slightly beat or a slightly miss. But if that happens, I do believe, since there are a lot of fears priced in this stock, if you go with expectation or a slightly bit, you can be up like 2, 3, 4, 5%. It might happen, but that's when it gets interesting. If you beat expectation, that might be the trigger point where investors might get started to be interested again in Alibaba stock or in Chinese stocks. So there will be a lot of reports of Chinese companies during the next week and in the next. So if we have good earnings report, it always triggers a major buy into stocks, and could be that might be really what we really need to see Chinese stocks starting to recover to a more fair valuation, I would say. Right now expectations are really low, and this is a scenario I really like to be in. Bear in mind, I don't want to Alibaba or my Chinese stocks to recover. I like having companies undervalued, buy undervalued company, and I like them to stay low. And that's because Alibaba is buying back a lot of shares, and that's really good. I've read the latest report that Alibaba sent. They now every quarter they send an update of how many shares they bought. Last quarter it was a record of share buyback, and this quarter they report the second quarter they bought back more than $5 billion dollars US dollars of Alibaba shares, which is around 2.5-3% of the company. If they can buy back 3% of the company every quarter, it's they will be buying back more than 10% per year of the company. And if they stay at this lower valuation, they could be increasing their buybacks, continue to buy back a lot of shares, and that's really good for the business. So for the investors that are expecting, I want Alibaba to go to 300 as fast as possible, that might not be the best way for shareholders to increase their shareholder value. So I don't want Alibaba to recover as fast. I know what I bought. I know what is the worth of Alibaba, and if they maintain this lower valuation and continue to paying dividends, making money, buying back a lot of shares, that is really good for me. So that is something that we should be looking to this next earnings report. They will be continuing to making money. If they accelerate their revenues and increase their profits, that's what counts, not the valuation or the stock price. When you look to the fundamentals of Alibaba, for example, trading at the forward P of 8.7, revenue growth, they have been growing. When you look to the chart of revenue and free cash flow, they continue a major trend upside. Their gross margin have been going down, which is not good, but in the last few years they have been buying back a lot of shares. When you look into that, 2023 they bought back 3%, 2024 they bought back 3.6%, and I do believe this year they will be buying back more than 5% of the company. That's really good. They have been growing really good. Their margins are not bad, they are really good, and they can be increased in the future. If you look into Amazon, they've been increasing their margin, and I do believe Alibaba in the future will do the same. They have plenty of cash in hand. Basically, they have $80 billion in cash in hand, and their valuation is just double of that. So they basically half of their valuation they have in cash. Long-term debt, it's really small compared to the cash in hand. They have net cash of $60 billion, which is 1/3 of their valuation, around that. The returns on equity and on invested capital are not high, but with the profitability recovering and they starting to get higher free cash flow margins and their profits increasing, their returns will be above 10% for sure. I'm sure of that. They now pay a dividend, it's between 1 and 2%. They are distributing capital to the shareholders, as I like to see. Checklist, all check marks. They have been growing. They have pretty good margins for a business like Alibaba. Basically, no debt. They could pay that with the cash on hand. So the returns on equity and on investment are low. It's not checks, but I do believe when their trough earnings happens, they will have high returns on invested capital. Right now, they are investing a lot of their profits into the business, into growing their business, and the CEO of Alibaba said their priority is to reinvest their cash into the business, into growth opportunities, and right after that they will be buying back shares or paying a dividend in order to return some of that extra capital to the shareholders. So I really love the management of Alibaba. They are doing what they should do, not valuations are down, the stock price are down, I'm not going to do share buybacks only when the stock is up, that's when I will do share buybacks. That should not happen that way. You should be buying backs when valuations are low and when the stock is really undervalued. That's the best way. They have a lot of competitive advantage. I will not talk about that. They have a wide moat on China. They have been free cash flow positive, and they are returning a lot of capital to the shareholders. Their earnings yield, or they are basically doing buybacks and share buybacks at an yield of around, this year could be around 10%. I would say 2 and 2.5 dividends, and they could be buying back like 8 or 7% of the company, just distributing some extra cash they have. You could have shareholder yield of around 10%. You don't see any other company in the stock market doing that, so that's the major reason I love Alibaba. And valuations, even though it's a Chinese company, there are some risks investing in China, so I have to use a discount rate, a higher discount rate, even though for my base case I assume a 14 discount rate. Bear in mind, for the S&P 500 or to discover the intrinsic value of a company, you usually use 9-10%. I'm using it higher than that, 14%, and even with that we came with an intrinsic value of 147. Right now Alibaba is trading around $80. It's like 40% discount. There are a lot of big margin of safety into buying this stock, one of the best companies on China and in the world, growing. This is a major opportunity, and as long as sentiment on China is low, they will be trading at a lower valuation, but that is a really good thing. They will be, as long as they continue to increase their revenue, as long as they continue to increase their free cash flow, they will be printing money, they will be returning that money to you shareholders by shares buybacks or a dividend. So that's really good, and they can, with this lower valuation, they have the opportunity to buy back their own shares at a discount, and in the future that will be good. Investor sentiment will change eventually, and valuation will sky high for Alibaba, and that's the time when you can take some profits. Besides that, what matters is the growth of this company, their moat, and their management is doing a great work. So for this latest, or not latest, this next earnings report, Alibaba is in a very good situation. Expectations are low, and I would say there are a bigger probability for Alibaba to beat their expectation and be up in the next earnings report than be down. But if Alibaba goes down and miss some expectation, that might get another good opportunity to buy Alibaba at a lower valuation, and that's what matters. So I hope you like this video, guys. This is my earnings report preview for Alibaba, and if you want more videos, please like and subscribe. See you next Thursday.